चलो 14 minutes 14.
Hi everyone.
Hi.
Hi Rajendra sir. Sorry for joining
Yeah.
late. We have some new participants today. Anuj, Gurudev. You guys, am I audible?
Yes, sir.
All right.
Yeah, sure.
Yeah, thanks. Okay, Kaushal, thanks for joining. Shivam, Sweta, Raminder sir. So all right, we have a good audience today. Obviously, we had yesterday also, and some new joinees are there. So yeah, let's welcome them. Hi Anuj.
Hi.
Hi, audible? All well?
Yes.
Okay, thanks for
Thank you.
joining. Yep. So can we wait for another 2 minutes and then start if someone else is joining? And I'll take a small break also. Just a second. Yeah, so as usual, I'll put all you people on mute so that we don't have background noise from the other participants. And if any one of you have any question, you can raise hand. There is a raise hand functionality. You can put from your mute on your side also. That will be much convenient. So what I'll do that I'll unmute everyone, and now it's your responsibility to mute yourself from your side unless and until you want to unmute it. And so I think yeah, very good. So all of you have put yourself on mute mode, and thanks for that. So now if someone want to stop me anywhere, we want to be make it as interactive as possible. So please intervene any place where I'm going fast or I'm going slow. If you are getting bored, you can tell me also. Okay, so yeah, so and in between I'll also ask few questions just to make sure that we are going at the right pace. So yeah, starting from where we left. Lalit, can you put yourself on mute? Thanks. Right. So yesterday we started with giving the overview of what we will be covering in these 5 days. So on day one, we covered something about what is the purpose of a stock market, basic roles and responsibilities of all the market participants like SEBI, stock exchange, uh, depositories like NSDL and CDSL, then stockbrokers, sub-brokers, and obviously the investor's role also, as well as the company's role. So, and then we went ahead and understood some key and definitions, almost 25 30 key terms which we covered, should have made us comfortable about the market. Okay. Today, as I said, yesterday, that investing into equities is something like investing into companies, right? And these companies are nothing but organizations which are doing businesses, right? And all these businesses get operated into certain industries, right? So if we try to make a hierarchy, what we see that every company is having some business which is operating into certain industry and sector, and that sector obviously fall into one or the other economy, right? So before we understand the companies, it is very important for us to understand the economy, business environment, and different type of industries where we can invest our money, right? So today we will try to understand our Indian economy, business environment, and the different type of industries which is here, and we will pick up one industry and try to understand the micro and macro factors of that industry, that how it is performing or what is its contribution into the economy. And from there we will further drill down to one company and see that if that industry has done good, how exactly the company has done well. So we'll try to take as many as example, or we'll try to make it interactive in terms of understanding top to bottom approach. Will not take much time understanding this, but what I feel that in understanding this is very very important. So every time when we talk about fundamental research, we forget about one thing, that at the end of the day we have to invest into businesses, invest into industry, invest into a certain a certain economy also. So as when I'm talking about this economy factor, and when I'm also saying that we have to invest into companies, I must tell you that who are the investors into our own economy or our own companies. So I will take some very common names from the company's perspective. So very common name could be ICICI Bank, where people would have invested in equity market. Everybody is aware about this bank, right? They employ a lot of people, so they have given good return to their investors also in past. We can talk about Infosys, we can talk about TCS. So let's try to understand who are the people who are investing into this company, whether you are investing, I'm investing, or who exactly is investing. So this is something called share structure, you know the share structure of a company, that who. So as I yesterday explained about the shares, that it's the ownership of the company. So let's try to understand at the very very start of this class, that who are the investor of these companies. Okay. And I'm sorry for having a bad throat. And yeah, happy Teachers Day to all of you. So Infosys share price, hope my screen is visible to all of you. So okay, it's a very famous site, money control. Let's also open Rediff money, Infosys Rediff money. Shareholding pattern. All right. So I have opened Infosys shareholding pattern. So I'm trying to understand who are the investors of Infosys. Okay. So here is Indian promoter, right? They are holding 12.75% of Infosys shares. Mr. Narayan Murthy as his gang of first 7 8 people who started this company. Then comes the second part, is the institutional non-promoter holding. Okay. So Infosys is one company which is very thinly it right now get thinly holded by the promoters. So promoters are the people who start the company. Okay. Now these promoters are just holding 12.7% of the total company shares. Okay. Chandranshu, can you put yourself on mute?
One sec, one sec.
Right. So Indian promoters are holding 12.75%. Then comes the non-promoter holding. So in this non-promoter holding, what you can see that banking, financial institution, and insurance is holding this 11.24%, approximately equal to the Indian promoters. Okay. who are the other people? FII, foreign institutional investors. They have invested 37.53% of the company. So every time, you keep hearing about the FDI, 51% FDI, 51% FDI in certain sectors. So here in the IT sector, you can see that this FDI investment, foreign institutional equity investment, is 37.5%. So Infosys is 37 firang company, in a very crude language, right? Been held by all the goras who are sitting 10,000 kilometer from here, right? Okay, so ADR is American Depository Receipt. I mean, this is something. This form of the shares get traded in US. So what I vaguely remember that in 2012, I think Infosys share was not getting traded, but the ADR was traded. So this is 0.5%. Others are 20%. So these other category would be, we need to find it. I mean, we will expand it and then we'll find it. But this other is holding 12%. 2 points which I might want to highlight here is this one: FIIs and the general public. So promoters are those people who are basically owning the company, who started the company. In this case, they are obviously not owning the company at this point. So the appointed board is owning the company. They take most of the decisions. So here we can see that we, you, me, and everybody who is into this class right now, we are invested 9 or 10% in this company. And then foreigners or the foreign institutional people are 38% invested into this company. Okay, so they are investing into our economy, right? Let's take some more example from the other industry. Let's say HDFC, and try to see the shareholding. Okay, here we can see that FIIs are holding 77%. I mean, virtually they are owning the company. However, the general public is holding just 8% of the company. And obviously, the promoters are there. So, promoters and the other financial institutions like LIC or other mutual funds of our country would be holding some shares also into this company. So, why I'm showing you these numbers? So, there is a linkage which you will come to know when we progress to the class. So the linkage I will try to show when I'll explain you about the industry, about economy and everything. So here we can see that, so these two companies I shown you, but I can tell you that top 50 companies, nifty 50 में अगर आप कोई भी company उठा के देखोगे, तो on an average you will find that 35 to 45% of the shares are being held by the FIIs, right? Okay. Now, why FIIs are investing here in India? We need to we try to understand that, right? And not only one sector like IT. They are virtually investing into every sector. So for that, now we'll go back to the presentation and try to understand. So right now we are just building up with the certain knowledge and certain visibility about the market, and later on we'll do some research also on this, right? Okay, so this is what I was explaining, that we have to understand this economy, business environment, different type of industries, and how, and we'll take one example from the industry and company also and try to do some research over it. Okay, then we will go through Nifty and Sensex and try to understand that how exactly they are formulated, and this we will do as a part of exercise. So I will assume that I don't know anything about Nifty, and I just have to research around it, going through the Google thing or taking help from one or the other website, and try to understand why Nifty was. So let's say if we go and open the NSE website. So yesterday also I explained that if not much, then everybody know at least these two keywords, and those two keywords are Nifty and Sensex, right? So we will try to understand why it went 40 point up. I mean, what was the calculation behind that it went 40 point up, right? Why I'm explaining this? Because it will expose us with a lot of tools through which we can do research. So we'll do this as a part of exercise, and in the last section, again, we have something called valuation. So when we buy something, we should know what should be the right price. So that's why we will also try to you cover this
Hello.
valuation part. Yeah, hi.
Hello, sir. Actually, I have one question.
Yeah, tell me.
Sir, as you said, FII have a major shareholding in the stock market.
Right.
So they can manipulate the market.
They can manipulate the market means what?
सर इसमें अगर सर वो बल्क में परचेज करेंगे तो प्राइस अप होगा, बल्क बल्क में सेल सेल करेंगे तो प्राइस डाउन होगा.
हाँ, तो इसमें मैनिपुलेशन कहाँ से आ गया? So how
तो
does
सर
it
मैं
manipulated? So if they want to buy, they are buying. If they want to sell, they will sell. If you want to buy something, you buy. If you want to sell something, you sell, right? So where comes the manipulation? So tomorrow you went to mall and you bought all the shirts. So but nobody else can buy the shirt, in Gurgaon. Now you have the purchasing power, you bought it. But will you buy it? What will you do with so many shirts? You'll not do anything, right? And similarly, if you want to sell
राइट सर.
every article of your house, starting from the mat to the building to everything, fine, you sit on the cash. But what will you do with that cash, right? So nobody try to manipulate the big
But sir,
company.
they can create artificial demand and supply.
Sorry.
But sir, they can create artificial demand and supply, and you know the stock market is totally dependent upon demand and supply tool.
No. So what answer you are expecting? Should I say yes or should I say no and then defend it? Because I don't have an answer for this, whether they can manipulate or not.
Okay.
All right. In fact, nobody is having that answer, I think.
Okay, sir.
Right. I mean, supply and demand don't come because of there's something called about market, a very universal
सर जो
statement.
हर्षद मेहता का स्कैम था, हेलो
Hello, yeah.
सर, जो हर्षद मेहता का स्कैम था वो भी तो यही था ना कि वो जो उसने एक आर्टिफिशियल बैंक के थ्रू मतलब मार्केट में पैसा लगाता था, तो आर्टिफिशियल डिमांड क्रिएट करता था, उससे मार्केट अप जाती थी, फिर
Right.
वो सेल करता था, तो ऐसे करके मैनिपुलेट करता था मार्केट को.
Right. Yeah. So Harshad Mehta, whatever Harshad Mehta did, या जिस तरीके से भी उसने किया, so if you know what is the exact
Okay.
case of Harshad Mehta, we will probably take up that also as a case. So yes, that can be done, but what I'm trying to tell you that market correct itself, and this is where we have to be safeguarding ourselves, right? So this is the case every time FII sells into the stock market and Nifty crashes by 500 800 points. So this happens, but that impact them as well. So if 37% holding is mine into some company, I'm equally exposed to the risk of
Okay.
investing into that company, right? So I'll be one of the guy who will equally get burnt, right? So nobody, so something like FIIs, the
Okay.
supply and demand they can create, or they can uh, they cannot be created also. So honestly speaking, if I have to accept something, I don't have an answer for this, okay? Whether they can manipulate it or not. Manipulation happens. Financial market is having a lot of frauds. It was there. It will come. A lot of Ponzi schemes get created in different part of the world. Sometime in India, sometime somewhere else. So frauds are something which is part of the game. Every game, whether it's a stock market, whether it's any industry, or whatever it is, right? So they
Okay,
can
thank you,
do it.
sir.
They cannot do it. I don't know, but. As a stock market believer, I think companies like Infosys, HDFC, and these companies, they are so widely held that it is very, very difficult to manipulate. First, second, it is very, very difficult to for one guy to sell all his share at one go, because if tomorrow any guy go, so I'm holding 37% equity and the stock prices is 1000 rupee. Yes, if something goes into the company, goes wrong into the company fundamentally, yes, I have to come out of it at whatever price it is there. That is the basic rule of investing into equity market, right? But for no reason, just to manipulate, if I think that I will sell all my shares and bring down the price of this stock, what I'll be doing, that I'll be deterring the valuation part, I'll be losing my own money. In that panic mode, I will I'll be able to sell my first 2-3% of the share, and rest 30% of the share will get stuck into the market, right? So ideally, if you ask my view, I can give you my view, and my view is no. In Nifty 50 companies like Infosys, HDFC, or other companies, it is little difficult to manipulate the share prices. Okay, the people, in fact, they have become more responsible about these companies. So, okay, anyway, so I think it answers your question and we'll go back to the presentation.
Yes, sir. Yes.
Okay,
Sure.
thanks.
Thanks, sir.
Thanks for asking the question. All right. So some new joinee has also come. Hope you people are with us. If someone want to ask any question, meanwhile, if you think that we are going through the presentation, but you missed something, you can ask me. Okay. All right. So going back again to this. So this is something we will understand, and we'll also understand the valuation part. Okay. Now, since we spoke a bit about industry, companies, and everything, and then we said that we'll know something about the economy, here is something about our Indian economy. Right. So, and we are calling these two classes identifying good companies. Okay. So today is part one, tomorrow is part two. It is called fundamental research. So, I mean, I'm sharing fact and my own understanding about those facts. So facts are something which I have taken from good source like World Bank or ORG. Okay, so let's understand Indian economy. So we are supposed to be the sixth largest in world by nominal GDP. Let's understand GDP first. Okay, so GDP and GDP per capita. So GDP is the total finished good produced. So see, stock market के ऊपर finance है, finance के ऊपर economics है. Similarly, stock market के ऊपर industry है और industry के ऊपर economy है. And we are trying to do the dissection based on that only. So there could be many other terms related with economic terms which we must be knowing, or if we know it's good, but I have taken a very small or very generic terms which we must know, and that will expose us with a lot of comments what people make about the economy. So you should understand it, and that's why I have taken this into the presentation. So GDP and GDP per capita. Now what is GDP? Total finished good produced plus total billing done on services. So in our economy, we generally have three sectors. One is agriculture, another is industry, and then third is services, right? So in agriculture, whatever you are producing, whatever the product you are making into final product into the industry, and then when you are into service industry, whatever the billing you are doing into the services industry. So the whole country production plus services will be calculated as the GDP across world. Okay, so just to give you some number, India GDP is 2.26 trillion dollars and US GDP is 18.5 times trillion dollars, almost 9 times bigger economy they are. So why I've taken US GDP? Because they have the best. They are number one, so that's why I've taken. Otherwise, there's no, there was no agenda behind it. So US GDP is 18.5 trillion dollars, and India GDP is 2.26 trillion dollar. Okay. So in rupee term, just to imagine few things, so it's 120 lakh crore in 2017, and it is growing at a rate of 7.1%. So every year it grows by 7.1%. So in next year with the same growth rate, our economy will be probably 2.4 trillion dollar. Okay. Now personal consumption expenditure. So let's go to the formula. So personal expenditure, consumption expenditure plus business investment plus government spending plus export minus import. This is what the economist has defined GDP formula. Okay, this is the best way to compare. Okay, but this is GDP, right? So when we say that uh, India is sixth largest, so GDP you understood, right? And GDP per capita is something which we will understand also, but let's go back again to the economy part. So yeah, so however, we are 141st in per capita GDP. So even when we are sixth largest economy, the situation is not that good here when we calculate it per person GDP. So our GDP is big just because we have so many people who are contributing towards services and production both, as well as into the agriculture sector. And that's why maybe at we are at sixth position, but when it comes to per capita GDP, it's very poor. It's very poor. I mean, 141st is not something which is termed as anyway good. or even bad. It's poor. Okay. Now India topped the World Bank growth outlook for the first time in fiscal year 2015-16, during which economy grew by 7.6%. Now, what does this mean? It means that 7.6% was something in that year where, I mean, India growth was the best among all the countries. So yes, our growth rate is good. This is the only thing which we can be happy about. Now, the growth rate has dropped in 2016-17. It has came down to 7.1%. Some people are saying things like demonetization and some other factors where government is trying to fix the things for the longer term, but it's making disruption in the shorter frame. So it's a political statement from my side. I'm not political person, so I'm just saying that these are the reasons what economists are giving, that the GDP has dropped because of some government decisions which has disrupted the businesses. Okay. Now, according to the IMF, India growth is expected to rebound to 7.2 to 7.6% in 2017, 2018, okay, and 2019. So next 2 years, probably the growth rate will be better. And India has one of the fastest growing service sector in the world, with an annual growth rate above 9% since 2001, which contributed to 57% of GDP in 2012 and 13. This last part we'll discuss later. So yes, so you understand GDP now. So GDP is the final produce of our country. So you, me, and your neighbor, and the people of Gurgaon, people of Haryana, people of India, we all are doing something in terms of doing, giving certain services, in terms of producing something, and the collective approach, the collective outcome is called to be the GDP. So let's say I produces rice worth 100 rupees, and one of the participant Bhudev, who just asked the question, let's say he's an IT engineer and he's billing, he's working into some company who's billing one of the US MNC $6,000 per month. Okay. And I'm producing 2 quintal of rice per month, and we two are only the humans of this country, India. So the calculation of the price of this two ton of rice plus his salary what he built for one country, from one company, will be called as the GDP of this country called India, where only two people, me and Bhudev, will stay. Okay, so this is the GDP thing, and our GDP is like 2 point. I told you something. How much? 2.26. Uh, yeah. So okay. So here we'll go. So $2.26 trillion, and US GDP is $18.5 trillion. Okay. Now, this is the best way to compare gross domestic produce between countries. That's because some countries have enormous economic output because they have so many people, like India. To get a more accurate picture, it's helpful to use GDP per capita. This divides gross domestic product by the number of residents. It is a good measure of the country's standard of living. So when I say 141, or if we get that data from World Bank, then we can also correlate it that yes, the people who have stayed outside and people who have heard the stories about outside or seen it in movies, you can see the kind of difference we have, in these two countries like US and India. So the 2016 US GDP per capita was $57,000. However, India per GDP per capita was $7,000, right? So this is what you can so taking a reference point to compare is a good way to understand. That's why we are taking the point of reference as US. Okay. Now I thought, why not include this part and try to understand. Many times our politicians or a lot of people keep on telling that we'll become number one, will become number one. So yeah, I also, but I'm very hopeful that one day our country situation will be much better. So I'll take just 5-10 minutes understanding this part. So yeah, हम होंगे कामयाब. How? By power of compounding. So I have 4 questions here. Let's say, what will be the GDP after 10 years if we grow at a rate of 7.6%? So US growth rate is 1.2% according to the World Bank. Okay. So their GDP is 1.2%. Our GDP is 7.6. Yeah, hi.
Yeah, Kaushal here. I just have one question.
Sure, Kaushal.
Yeah, the GDP that you have explained, it is understood. The GDP that we are saying is in form of annual, right?
Yeah,
It's
yeah.
2 point.
GDP is always compared annual. Correct.
Now, when I comparing 7,000 US dollar per GDP per capita, so
Right.
$7,000 per capita per annum.
Per annum, correct. So our GDP will be 7,123 into the population of India, which is like 130 crore. That will be the GDP of the complete whole country.
Yeah. So 7,000 for one person annually.
Annually, correct.
Okay. So I was just thinking about to calculate into salaries for per hour because we are billing US company into hours. So I was just thinking how to get that into hours.
Very good point you have raised. We'll see this, in the next two slides. We will see this only. That which sector is doing what and what earning they are doing. So you are 10 minutes ahead. We are going there. Okay. Is it fine, Kaushal?
Yes, yes.
Oh,
Okay.
okay. Okay, fine. Thanks. Yeah. Uh, so there's no again agenda behind it, but I wanted to do this calculation to show you people some few things. So we are growing at a rate of 7.1%. I'm not taking the futuristic rate. I'm taking whatever we are going through at right now. So I have taken the compounding into the picture and then calculated this. So what will be the GDP of India and US after 10 years? So India will reach to 4.51 trillion and US will reach to 21.76 trillion. After 20 years, we will go to 8.9195 and they will go to 25.51. After 30 years, 17.77 and US will go to 29.90. Okay, finally, here we will be, the Kamyab one, where we will be superseding uh, the GDP of US. So India GDP after 40 years with the same rate of compounding will be 35.29 trillion and US will be 35.04 trillion. So power of compounding or the fundamental research, these are nothing but 2 plus 2. Okay, knowing things, knowing some fact, doing some mathematics and coming to a conclusion. So we can see that with a simple calculation, if we continue to grow, okay, so if with this calculation, if we continue to grow at 7.1%, sorry, this is a typo, 7.1%, probably it will take us 40 years, and we assume that US will keep on continuing. See, generally US growth rate was 3%, so but the latest it has came around 1.2 or 1.4%. So I have taken the data from World Bank site, and according to that only I have done this calculation. Okay, so if anything is wrong in the data from the World Bank, I mean, they are responsible, not me. Okay, the idea behind doing this calculation is to show you the power of compounding. So even when we are lacking, because industrialization happened very late in our country, liberalization happened very late in our country, which is good for business. Maybe after 50-60 years of US, we still have a chance to supersede them if we continue to grow at this rate. So even if we are not able to, I don't know, I mean, if I keep my health well, probably I'll be able to see this day that we are the number one economy. Okay, so that's why we did this calculation, and the similar thing happens, when you go for the investing, this power of compounding work there. So if due to the power of compounding we can supersede US, from we becoming a country which is like, US is 9 times stronger than us, 9 times bigger than us as economy. If we can supersede them, so if we have a constant power of compounding in our own investment, we will be able to have very good portfolio also, right? I'll just take a break here and ask one or the. So Shad, are you in the class?
Yes, Kundan, I am.
How are you?
I'm good. I'm good. How are you?
Good, thanks. So is it making sense?
Yes, yes, absolutely.
Any question?
And Rav, not at this point of time. You have explained it pretty well.
Okay. Thanks.
And I think I've been given private lectures by you, so I have quite that of bit in my mind
Yeah.
right now.
Okay. Sure. Thanks. Sweta, any question?
Ye- Not at this point of time.
All right. Fine.
I understood your part.
Yeah. Okay. Thanks, Sweta. Okay. So now that we understand our economy, okay, let's understand the sectors also. So what are the sectors? So as I said, three major sectors are there in the category wise. If we have to take, first is the agriculture. So the contribution of agriculture. So this is 2014 data. Okay, not the latest one. So agriculture contributes 17% of the GDP, and they employ 49% of the workforce. So government has some calculation methodology when they do the survey or when they get the data, but this is what we get from the secondary sources, and that says that agriculture is contributing 17% of the GDP, and they employ 49% of the workforce. Okay, now what happens in agriculture? We produce crops, horticulture, milk and animal husbandry, aquaculture, fishing, sericulture, aviculture. Okay, so I also don't know this sericulture and aviculture. I copy pasted from some website, but yeah, I'll read about it. I'll share this PPT with you people. You can also read and explore. So I cannot explain you what is sericulture or aviculture. Rest I know. Okay, in industry wise, we have 26% of the GDP, and this employs 22% of the workforce. So 17 plus 26 is 43%. So agriculture and industry gives your 43% of the GDP. What happens in industry is petrochemical products and chemical, pharmaceuticals, engineering. So in engineering you have everything: transport equipments, two-wheeler, four-wheeler, machine tools, capital goods, transformers, switch gears, furnaces, cast and forged part of turbines, automobile and railway. Gems and jewelry is another industry: textile, mining, iron and steel, defense, pulp and paper. Okay, so here comes the industry which is producing things, right? In our sectors, then we are largely a service economy, and this is something happened with Indian economy because of tough business environments before liberalization. So there are very famous stories I would like to talk about, and you people would have seen also in your own experience. So before 1991 you used to have only one or two companies which used to make watch. Okay, now we have thousands of companies which make watch, and that was HMT, Hindustan Machine Tools. There was one scooter company which was Bajaj, and there may be more, but not in that number. So maybe two or three or four, not something like we have hundreds of brand today in these sectors. Another example could be the four wheelers. So we used to have a Mazda or Fiat, or very limited number of companies into four wheels also. And there was a very famous say that if a child get born in India before 91, uh, if the child is a male child, the father will rush to the sweet shop, and if it's a female child, they will rush to book the Bajaj Chetak, because this is what he has to give in dowry after 18 19 years. And the waiting period used to be like this, 18 19 years or 15 years for Bajaj Chetak. I have not experienced it, but yeah, in some of the talks some people have told me about this. There was also a very famous case against Mr. Bajaj, the founder of Bajaj, where he was producing, he was arrested, produced in court, just because he was manufacturing more scooters than what he was allowed for. Okay, so government had a control everywhere. They were dictating people. It was a licensee raj, and they were saying how much you have to produce, how many number of units you have to produce, right? So what happened because of this, that generally the transformation of the industry happened in other countries like this, that you first had agriculture, then you went for the industrialization, and then service economy came. But just because after independence first 30-40 years, again, this is not a political statement, this is, I'm explaining you what it happened. Okay, it has nothing to do with during all these years Congress was in power. Okay, so now the idea is for these 40 years, the production was happening in a very restricted environment, and that's why we jumped directly into the service economy. We got, a lot of craze because of the IT and ITE services after 1991, and there were many reasons why it happened. We will come to know about that, because in this class we are going to dissect that IT services industry only. So services contribute to 57% of the GDP, and it employs 27% of the workforce. So now coming back to your question, Kaushal, where you wanted to calculate few things based on that per capita GDP. So see here, the agriculture is contributing 17%, but 50% people are employed. Industry 26-22, here you have a very very good number, 57 and 27%. I mean, this is the reason people used to say that IT company के लोगों को बहुत पैसा मिलता है, इनको पैसे की परवाह नहीं होती है, right? So obviously that has happened. People got paid really well in last obviously this is not the case now any days. People are very much worried into that sector, but yes, this was a winning sector for very very long time. I graduated from college during this time also, and I must admit I was also the beneficiary of this. So I had a much easier life than people who were going to the very very core industry. And this is not to boast about, this is the fact. Okay, so when you were talking, Kaushal, about billing per head, here you can see whether you are billing them for this or this or this matter. Okay, so billing per person in US for a skill set where you are hiring a Java developer is something like it could be higher side because it comes into the service industry and we have an edge over there, right? So that calculation what you're trying to do is will be not that easy. You have to see which country you are sitting in, from which country you are transporting the labor, and many other things will be there. You know better about your industry, so you can do it for that. But yes, these are the sectors we have. Okay, so now let's list down all the sectors of one place. Anybody has question? Someone has? Okay, fine. So let's list down all the sectors at one place now. So agriculture, pharma, petrochemical, engineering, gems and jewelry, textile, mining, iron and steel, defense, blah blah blah. So all these sectors are there. So ideally, when we want to invest, we should have idea about all these sectors. You never know which sector you come across has a fantastic company to pick up, which you also know. And most importantly, we all have worked into one sector or the other sector, and we know that sector best. So at least in that sector, we can be a fundamental researcher for sure. So I'll try to act as a fundamental researcher now for industry I served in. Okay, so we'll take the example of IT industry, right? uh, this is the fact about the IT industry. I mean, I could share the similar kind of facts for the other industries also, but time will not permit that. So what I want that you people also go and try to Google. I mean, these are very simple things. You can just go Google, a lot of information you will get, and you just have to put those numbers into one piece of paper, and then you'll start, visualizing a lot of things about the industry or about the company, right? So let's dissect this one industry. Okay, so IT industry, the information technology industry in India consists of two major components. One is IT services and business process outsourcing, other one is business process outsourcing. The sector has increased its contribution to India GDP from 1.2% in 1998 to 7.5% in 2012. Okay, so in India GDP, IT sector or services sector, IT sector contribution within the services sector was 1.2%, and by 2012 it grew to 7.5%. Okay, what was the reason for this growth? So we are trying to understand one industry, right? You can also do the exercise for your own industry or for other industries as well. A lot of data is there on web. So let's go for the reason of this growth. So the growth in this IT sector is attributed to increased specialization. Okay, so here I don't agree for current scenario. And an availability of a large pool of low cost. Again, what is the current scenario? We'll discuss further. But yes, this growth, which has happened from 1.2% to 7.5%, yes, I agree with all the point I have written. That's why I've written it here. But what I'm saying that, do I agree with them still? We'll try to understand that. Large pool of low cost, highly skilled, fluent is English speaking worker. Now, this is a comparison we are doing because China lagged here. Matched by increased demand from foreign consumers interested in India's services export or looking to outsource their operation in India. So these are few reasons why IT industry suddenly grew in India. Okay. Now you people will say that Kundan, you are taking a stock market class. Why you are telling us these facts? So let me tell you, they are all interrelated. And before doing any kind of research on equities or companies, trust me, having a small view or some concrete view, and that view, so these are the numbers which I'm sharing, and whatever I'm delivering to you is my, is my perception found on these numbers, or my part of the, understanding these numbers. You could have your own understanding which could be much better, and a winning composition for you picking up the stocks for yourself, right? But yes, so this is what I have read. I have collected the data, that these are the reasons why IT industry grew. So why are you telling us these facts? Okay, this is why I was telling you the fact. So what I saw that one industry grew tremendously in one country, and let's take the example of one of the company which was there into this industry. Okay, and that
Excuse me, sir.
company, yeah, tell me.
Sir, I was asking that how can we calculate service sector?
Mm-hmm.
Means I went to a restaurant and I sit, and how can we calculate the AC room and the servicing they are providing us in
Mm,
GDP?
so first of all, two things are here. Okay, how can you calculate is a different thing. Sec, primary thing is, why do you want to calculate that?
Means, nee, just I want to know that how they calculate the money in monetary term. Means
Acha,
this is not a physical part.
how they are calculating, right? How, I mean,
Yes,
how government is
yes,
giving this number, right?
yes, sir.
Yeah. So
Yes, yes.
see, largely in the service, so largely in the economy, okay, a lot of things get billed and a lot of things get unbilled, right? That's why we have more simplification in terms of GST for the goods, for the services, goods, and services tax. So government collect taxes at certain rates, right? And they do a reverse calculation on that. So if I say that I have collected 10 rupees as the service tax, okay, then service tax through, let's say, the restaurant industry. So if I have calculated 10% and the rate of the service tax charged on the bill was 10%, then I will assume that the contribution is 100 rupee into the whole service sector from the restaurant industry. So obviously they have fixed a number, right? The interest cost, no, not the interest cost, the service tax. So at different industry they have given different service tax rates, and even if they have to waive off something, they still account it into their system that this was something which was there, but due to certain reason they have to waive it off. So government throw these number based on the tax they collected. Now that could be accurate, that could be inaccurate because of the black economy also, right? So if, let's say, I'm delivering this lecture to you people, and if I charged cash, right? I told all of you that okay, fine, I'm delivering this lecture and I need cash against this. I mean, government will never come to know what exactly happened during those 5 days and how much Kundan earned, and I collected cash. So obviously that will be not accounted. So is that answer your question, Asutosh?
Yes, sir.
Right?
Okay. Yes,
Yeah.
fine.
And Regarding the mechanism of the GDP, there will be a lot of reports. So you can, you can download, you can try to learn the methodology of the government calculation. This is what I know, and I have answered you. All right. So let's move further. And okay, so we were at this part that IT industry is having a very good performance from 1998 to 2012 into the economy of our country, where it grew from 1.2% to 7.5%. Okay, so what this fact is telling me, this fact is telling me this: I have taken the example of one company. I'll do one more in front of you, that how exactly I came to this research, so that you can do it for more. Okay, so Infosys share price was 8.2 rupees on 1st January 1998. Now it is 901 rupee. So 2012 also it was approximately 800, 900, 800 almost. No, it has not grown much in last 3-4 years. So so if you calculate this 100 times thing, you'll come to know that only investing into Infosys could have given you a CAGR of 30%. What does it mean? Compounded annual growth. So your money would have become 100 times in just 17, how many years it is? 12 plus 7, 19 years, which comes around 30% CAGR. Now, with this 30% CAGR, you would have beaten biggest successful investors of the world, even Warren Buffett, who has averaged around 18%, right? So now you can understand here that why I was trying to explain you people about the industry into a stock market class or economy. It is because it is very important to understand or to foresee that out of these many sectors, where exactly my money should go, or foreseeing which industry will be the next. See, the charm of the stock market is if you're growing your money something like this in at least 2 stocks of your 10 stocks. Okay, this is the biggest charm of the equity industry, where you are holding it for 10 years or 15 years, like you hold your real estate, and then make money like this. And trust me, if you do this calculation for the other companies, I'll tell you, like TCS, Wipro, or what are the other company, HCL Tech, you will find a phenomenal return, something like not 30%, but it will be surely 25% CAGR or 24% CAGR. We'll do one and we'll see. Okay, so let's do this. Okay, let's do a small calculation. Let's see how I have because at the end of the day, you people also have to churn data and see where exactly you will find the right data. So I generally use Yahoo Finance. They give the maximum time frame of data. So let's take one calculation. Anybody has any question till now, guys? Or all well? Vivek, you are in the class? Mr. Vivek Raman. Not fair. You join and you're sleeping. All right. Okay. So let's do this calculation. So here what I'll do that I'll pick up one of the IT company and see where they have gone. Nifty IT. So we took for Infi. Let's take for HCL Tech. HCL.
Hello.
Hello.
So sorry to interrupt you,
Yeah.
but the question is, what will be the growing sector with the next 10 years?
That I cannot tell you free.
Okay.
No. So Uday will try to do it together. Okay. I know that is the question. That is the question of yours, mine, or everywhere, or everyone's, right? So collectively, we will try to find out. We have some really good gentlemen into this class. They can give some inputs also. That what, in fact, we'll do this as an exercise tomorrow, where we will ask everybody who has joined today that with their experience. So just to let you people know, Bhudev is a fresher. He did his MBA and engineering. He met me once. He also is a good friend and joined this class. So Bhudev, there are many other experienced people also into this classroom right now, and tomorrow they will tell us that what they see. I mean, the more experienced people can. I'm just a teacher or a guy who just know stock market the way you know few things, right? But I cannot say that I'm a visionary. So we will, and this vision things develop with experience. So we will ask some experienced people within us what they see will be the next industry. That will be a good knowledge session for all of us, for you, for me as well. Okay.
Okay, so thanks.
Yeah, thanks, Budev. Okay, so I was here. I was trying to calculate the HCL Tech HCL Tech CAGR in 20 years or 19 years, right? Okay, so let's see this. HCL Technology share price historical, Yahoo Finance. I'm not sure when HCL Tech was registered or listed. And when I gave you this number of Infosys, I didn't consider the dividend which they paid. Okay, so dividend was another benefit of the stock market. Okay, so here we will go and see this 111998. So 221998. Uday, please put yourself on mute. So HCL Tech. Let's first come to know when was HCL Tech listed. HCL Tech, when was HCL Tech listed on NSE? Okay, here we can see. Okay, we have some data from 2001. So let's say we have 160. This is 2002 data, 64. Before this, it went up to 61, 65. We should be checking actually when was HCL Tech listed on NSE. When was TCS listed on NSE? Let's see the maximum data of TCS. So it is having a problem here. Let's put some effort finding the right numbers. Okay. Historical price of HCL Tech Yahoo Finance.
Hello.
Hello.
Yeah,
Yeah.
Kundan.
Yeah. Tell me.
Yeah, TCS had its IPO in 2004, so it was listed only then.
It was having an IPO in 2004.
Yeah, the IPO was in 2004.
Okay. May I know who is this?
Rajiv here.
Hi, sir. Okay. Sorry.
Mhm.
Okay. And HCL Tech?
HCL Tech, I'm not very sure of
So let's.
because I subscribed to the TCS IPO. I didn't to the HCL Tech.
Excellent, sir. Thanks for your input. So let's calculate TCS one only.
No, but one question when you were talking about 30 times CAGR on INFI,
Right.
have you considered the split and
Split
the
and
bonus
everything.
issues also, or no?
Yeah. So I have taken
Okay, it's
considered
after
this
that.
split part. Split and bonus has been considered. So when we download this data, that's why I'm doing the exercise in front of all of you. Okay. So when we download this data from the Yahoo Finance, they have generally done it. They have. So this graph, if you are seeing, they factor in everything. So if there is any split, they will factor in that. They will factor in according to this number only, the latest number. So the split and the bonus has been taken care in that Infosys part. But I'll check once. I can check once because we keep on taking data from here. So let's take about Infosys 1 year data from 2014 to 2004 you said, right? So let me take this 2014 to uh, 1 1 2005. All right. So 2004 December the stock price was 85 rupees, which is like 13 years before. Okay. So 2004, which is like 2005, this is December price. So in 2005, the data says that the stock price was 85. Let's note this down only. TCS share price in 2005 was 85 rupees. Now it is 2450. So what is the CAGR here? Let's try to see. Compound.
Oh,
Yeah,
Kundan, the TCS listed at 850, unless again they factored making it 85 because of your
exactly.
bonuses and stuff like
Exactly,
that. Okay.
exactly, exactly. That's what I said, sir, that Yahoo Finance, consider that because
Uh,
as a historical data
okay.
provider, they have to factor in all those things.
Mm.
So we have done this in past, and we saw the accuracy in the data. That's why you see this number as the lower number than the listing price.
Okay.
Yeah,
Thank you.
but thanks for highlighting this. So just to let you people some so I will take a minute here because some of the people are really young kids, like some of my college juniors who graduated 2 3 years back, and this is the first time exposure for them. They come from engineering background, and it is a first time exposure for them for the stock market. So Rajiv sir highlighted about two things. One is bonus issue, another is a stock split. So sometime it has nothing to do with the valuation or the price of the company. So what happens that you keep the face value of the share as 1 rupee or 10 rupee. So face value is something like a certificate, right? So these days all the shares are electronically present into your depository account, but long back it used to be a share certificate. On that share certificate it would be written that it is TCS share which is having a face value of 10 rupee, right? This was against just for the convenience. Then there is something called book value, which I explained you people yesterday. Then there's something called current market price, which is the ongoing price. So what happens that sometime the stock prices keep on going, right? So I'll tell you the most expensive share in world. It is called Berkshire Hathaway. Let's see the stock price of this company. So I'm trying to explain you why split happens. Okay. Okay, all right. It's $267,000. So if you want to invest into Berkshire Hathaway company, which is managing which is equating the portfolio of Mr. Warren Buffett, he takes all the call of Berkshire Hathaway. It was actually a company which was manufacturing something, but then he got everything inside this. So you have to have $267,000 into your account to buy just one share. So what he's trying to do, he's actually trying to do that he don't have to manage lot many investors. So it will be obviously not a widely held stock, right? So what companies keep on doing is if they want that lot many people buy the shares, okay, what they do that they keep on splitting the price of the stock. So this is one reason. There could be many other reason, but again this is my perception that why companies go for a split. So one thing why they go for the split is there is a psychological reason that okay, this stock price is very expensive, 27,000 or 30,000 rupees. However, the other stock prices is not that expensive. Let's say you want to just buy share of 10,000. You want to create a portfolio of, let's say, 50,000 rupees per month investment, where you are picking up 10 stocks to buy for another 1 year. Now you cannot buy any stock which is having more than 5,000 share prices per share price. So that's why company keep on splitting, and when they split, when they make two shares out of one share or four share out of one share, the value drop of the shares. Okay, so value drops means, so you have one share which is costing you 1,000 rupees today. Tomorrow it will split into four shares, and every share will cost you 250 rupees. It don't affect the fundamental of the shares. It don't affect the company of the share. It's just for the convenience that they split the shares. And then another thing which is called the bonus issue. So sometime company come with a bonus issue where they say that we will issue one share against five shares. So if you are holding five shares, company will give you one share. Again, this is also done for the convenience. It has nothing to do with rewarding the stakeholders. I keep on doing this discussion with lot many people that even if there is a bonus issue, the price of the stock will drop in the same proportion, right? So bonus or a split is something which is done for the convenience to please the appease, I would say, not even please. It is more like a appeasement policy, not like a pleasement policy for the stakeholders, and also for the convenience, right? So I would say split is for the convenience and bonus is for the appeasement, right? So this is what happens into split and bonus. This is what Rajiv sir highlighted, that have you taken these two factors when you took the data from 1998? So hope this concept is clear to the people who exploring the market at a beginner level. Okay, so here we will go and do the calculation for Infosys, TCS, which we picked up. A share price at 85 rupees, I remember. So here we have 85. Let's say we have an interest rate of 25 years. And so a lot of these calculators are there into net. So you can see that compound interval, let's say yearly. And let's see how much it goes. So it comes to 1236. All right. So let's increase this to 27%. It is still 1496. Let's keep it to 30%. 29%, let's say. It is still 1800. So TCS result is better than Infosys. If we see, yeah, it is. The it is still 19. It is better than Infosys, certainly. Yes, so this is the stock price of TCS right now. So what we see that at 85 rupees of investment at a rate of 32% per year for 12 years, your money will grow to 2400 rupees approximately, which is the share price of the TCS. What does it mean? It means that TCS has given a 32% CAGR, again beating Mr. Warren Buffett by 100%, right? So hope now you people will able to correlate that why I was explaining or taking time about the industry. So yes, it is important to understand industries. It is important to foresee industry. So in that same process where Bhudev highlighted that what exactly will be the future, I don't know what will be the future, but at least I can tell you what I see about this industry, because I have my personal experience as a professional into this industry. I was not directly into IT, but was very close to people who are working in IT. So I know a bit about it. I know the companies who are, and then obviously I've done some research also into the equity company. So let's see, and let's try to see what is happening in this arena. Okay, again as a fundamental researcher. So everybody,
सर
everything is fine here. Yeah, Bhudev, tell me.
सर सर मुझे ये पूछना सर, जैसे आपने बताया कि डिविडेंड,
Mm-hmm.
सर डिविडेंड के लिए मिनिमम पीरियड होता है कि कैश में 3 महीने या 1 साल के लिए होल्ड करना होगा शेयर तब डिविडेंड मिलेगा सब कुछ?
So those kind of record date is there. So
होगी?
yes. So company announce a record date that if by that date you were having the shares into your account, so it's not something like 3 months or 4 months. So before, when they announce the dividend, they announce a date, and it varies from company to company, right? So they announce a date that if you are having the shares on that day, you were having the share on that day, you are eligible for the dividend.
Okay, thank you, sir.
Yep, thanks. Okay, so Infosys, TCS, I have done some exercise you people will do using the same Yahoo Finance, the way I shown you, that will give you the insight of more companies, and not only Infosys, TCS or the IT industry, every other industry which you people know about. You can do about that, that what exactly has happened into your sector. Yeah, someone was saying something.
Yes. So this dividend, do you know before investing that which companies give out dividend? This is just a naive question.
Yeah, it is a very good question, sir. It is not a naive question. So people have their own what you can say liking for certain companies. Okay, some people want those companies which is giving good dividend. So yes, historically you can see that which companies has given good dividend in the past. Nobody knows the future, but you can foresee future based on what has happened in past, right? So this data you can find, and in fact there is a category. So some people say blue chip companies, some people say growth companies, some people say that I want those companies which give more dividends, or dividend oriented company. Yes, so the answer is which company gives what kind of dividend.
Thank you.
Yeah, that data is there, so you can see the historical data of all these companies, that at what rate they have given the dividend in past.
So when the companies give out this dividend, is that accounted for in the CAGR that you're calculating?
No, that
or
is not
that is
accounted.
apart from this?
No, that is not. That's what I said. That when I'm calculating this price difference, okay, or the price in
Okay.
increment, I have not taken the factor of dividend.
Okay.
So it was a good question. I highlighted that point, but sometime we missed that. So yes,
Okay.
that dividend thing is not included into that. By the way, may I know something about you, Mr. Krishnamurthy, if you don't mind?
I was a batchmate in Pilani,
Oh,
TK.
अबे okay, ठीक है.
Happy Teachers Day, by the way.
Thanks, man. Thanks for joining.
Yeah.
So now you'll give feedback to Bansala and everybody.
Yeah, absolutely. Yeah.
Okay, thanks. So
Yeah.
everybody, yeah. So TK was my batchmate, a brilliant guy in biological science, if I'm not wrong. And yeah, thanks, TK. Thanks for joining.
Yeah.
Yeah,
Thanks.
thanks. All right. So going back to the presentation. Yeah, so I have done this exercise for you people. Now you should do some exercise. It will be good if you try to connect it with the industry. Something I'll tell you about this course and the way I'm delivering it, or the way I have thought about telling people is I have been not taught this way. I have not read it this way. Okay, this is my way of explaining things. Okay, that I have included this industry thing, or I'm just trying to, or I'm just asking you people to do these kind of exercises if you really want to understand companies' performance or want to do good investments. So try to understand the basic things. The complex things will automatically get built. Okay, it's again a math 2 plus 2. Companies get formed, they are supposed to do business, they are supposed to make profit, and these are all numbers. Okay, it's unnecessarily this science has been complicated. It is not a complicated science. It's the simplest science, finding about the good investments. So you do it this way. You do more research from the internet and everything. Just develop your interest and you will do good. Okay, so we understood about
Hello.
Infosys. Yeah, hello.
Hello, sir. This is Puneet. I have a question.
Sure, Puneet.
Okay, so can we correctly interpret the CAGR rate? Let us take an example. Like suppose Sun Pharmaceutical Industries Limited initial share was 100 rupees,
Correct.
and it went up to 1200 rupees, and now currently it is around 500 rupees.
500 rupees.
Okay.
Right.
It can be due to several reasons. Like it recently
Whatever.
merged with NBAC
Whatever.
Limited, and the share price came down.
Correct.
Okay, so if I take the initial and final value, like from 100 to 500 rupees, CAGR will be less,
Right.
right? Because it has merged with NBAC, or
Correct.
it might have issued more bonus shares to the
No, so final price
investors.
is yes. So you have three price point. One where it was 100 rupees, then one
Yeah,
where it reached to 1200 rupees, and then there is a
yeah,
point when it reached to 500 rupees. Right.
yes, sir. So if
So
I consider the initial and final value, like 100 and 500, the CAGR value will be very less.
very
So
very
which
less
is not
because
the
more time
due,
has
which is
more time has taken.
yes.
Yeah.
Yeah, so which is not the correct reflect of the CGR. Like company was
No.
growing very well, but
So
due to
see.
the merger,
Yeah. So Puneet, let me explain now. Okay. So your question is, a company started at 100 rupees, share price went up to 1200 rupees, and then it came down to 500 rupees, right? So CAGR का एक definition है, right? Compounded annual growth rate. It's a mathematical
yeah,
number like compound interest. So obviously when it went from 100 to 1200, the CAGR will be something else based on the variable factors like the time, number of years, and then the variable. So that is the variable factor. Then you come to know what was the CAGR. Now, that
yeah,
time the CAGR could be 30% again. After 4 years, it
yes,
came down to 500 rupees, right? Now the share
yeah,
price CAGR is 15%. I mean,
yes, sir.
there's no confusion in it. If a company is performing well for a certain period, it will reflect higher return. CAGR is nothing but the return. It is just a
No,
return.
sir. I think I was not able to put my question in a proper way.
Please
Uh,
again
uh,
explain.
yeah. So the price went up to 1200, and the company was doing good. It
Correct.
has like acquired one more company that
Right.
was like going down. So that is the reason the price came down,
Right.
right?
Right.
So it has acquired other company, like company has grown, but the
Yeah.
CGR it is showing that it has declined from 30% to maybe 15%,
हाँ तो उसमें
or
दिक्कत क्या है?
or the,
तो
so but it is not the true reflect, no sir.
true reflect of what? So let me tell you. Let me tell you something. Okay. So
Okay.
Sachin Tendulkar, okay, played very well in first 10 years of his career, okay, and made a international record of having the highest run per match, which was 55,
Okay.
okay, in the first 5 years. So his average rate of run rate per match was 55. In the next 10 year of his career, he made a poor performance. I mean, these are just hypothetical numbers. Any Sachin fan, don't get offended. So in the last 10 years, let's say he he scored at an average rate of 35 per match. Okay, so his CAGR was 55 when you were seeing at his 10th year, and his CAGR would be much lesser, maybe 45 now, because of last 10-year performance. So CAGR is just a number. It is not reflecting anything. So a CAGR is not telling you anything. So when I'm there where I'm going, So when I'm saying that Infosys gave a CAGR of 30% or TCS gave a 32% CAGR, obviously it is past. It has happened that these companies has given you that. Why they have given you that? This is why they have given you, because industry itself was expanding. Stock market or company is always about building those businesses where the rate of return is high, as well as maximum capital can be deployed. How can the maximum capital will be deployed? There where we will learn about the valuation. जब हम लोग valuation पढ़ेंगे ना, तब ये वाला factor देखेंगे कि आज के date में how startups get valued so high, and they keep on getting so many round of funds also. So we will understand that in the valuation part. But just staying here at this topic and your question, CAGR is not reflecting anything. It is just reflecting. It is not telling you about the future. It is telling you about the past. So जब Sun Pharma का share 1200 था, the CAGR could have been 30%, and you would have bought the share in the anticipation that it will keep on continuing there. But it happened wrongly. You took a wrong decision looking at only the history and not the future, right? So people who make money or people who become successful, these are those people who see the future based on their expertise which they build, in their own industry and with their own expertise, right? So CAGR, so when you are
Sir,
saying CAGR is a reflection of something, CAGR is a reflection of past only. It is not a reflection about how the company will perform in the future.
it is a reflection of company's growth, right, sir? So, like 1200 रुपए
No,
का
no,
शेयर था
no,
और
no,
कंपनी
no,
ने प्राइस
no, it is not a reflection of the company growth. It is a reflection of company historical performance,
पास्ट परफॉर्मेंस
past
यस
performance.
यस जैसे सर 1200 रुपए का 1200 का शेयर था और कंपनी ने स्प्लिट इश्यूज किए ताकि शेयर प्राइस कम हो जाए, राइट?
तो आप हमारे राहुल से शादी
आप एक काम करते हैं, ठीक है? दिस इज हाउ यू विल अंडरस्टैंड. लेट्स ओपन द शेयर प्राइस ऑफ सन फार्मा, ठीक है? एंड दिस इज द हिस्टोरिकल प्राइस. ओके, सो लेट्स से यहां से पकड़ते हैं, ठीक है? 2011 से, बिकॉज इट इज गोइंग टू फैक्टर एवरीथिंग, ठीक है? So I'm doing your research again. Here we go. Sun Pharma 220 rupees on 20th May 2011.
ओके
2011 price was 210. ठीक है? Then 1118 rupees on April 2015. Harsh Walia. Okay, so this song was from Harsh Walia. He is one person from Chandigarh, I guess. Okay, so 2011, and then Sun Pharma price in April 10, 2015. So April 2015, it is price was 1120, and let's say in September 2017, price is 460. So one by one. So the any split or anything else has been taken care here. Okay. This price movement is very uniform, no split, nothing has been shown. Okay. And we are taking just this time frame. to answer your question. Now, अब इसका क्या मतलब है कि मान लो Sun Pharma was listed at 200 in 2011. So at this point of time, what was the CAGR of this stock? So last 4 year CAGR भी इसको बोल सकते हैं. ठीक है? Let's open the calculator. 210 and 4 year compounded annually, and let's say the interest, let's say that CAGR I'm thinking is 30%. So it is coming to 599. So it will be much higher. It is 35. Okay, it is still higher. So let's take 50%. It is coming approximately to that level, 53%. Now it is coming to 1150. So you understand this formula now. I'm using a web-based compound interest tool. इसमें तो कोई issue नहीं है ना आपको कि ये मैं क्या कर रहा हूँ reverse calculation?
नहीं sir, it's okay.
It's okay, right? So this is showing me that.
No, it's fine.
Yeah. So this is showing me that 210 rupees becomes how much? 1120 if they grow at 52% with compound interval of yearly, which is CAGR. Compounded annual growth rate. Compounded annual matlab compounded yearly. Growth 52%. Rate is 52%, right? So I will mark here.
Kundan, can I give some input here?
Sorry, who is
Kaushal.
this?
Kaushal here.
Yeah, Kaushal, tell me.
Yeah, just I don't remember difference of 2011 and 2017. Hi guys, I'm Kaushal here, living in Oman, Muscat. Yesterday only there was a friend of mine who was staying in Oman for last 30 years.
Mm-hmm.
Okay, and when he came here, money.
Kaushal,
Okay.
Kaushal,
And yes,
Kaushal, you're not audible. Can you come again?
yeah. The question that you're trying to explain, I would like to give more thoughts on this.
Yeah, please.
Yeah. To all guys, I'm in Oman here, myself Kaushal Shukla, and I'm living in Oman for past 8 years. Yesterday, we do money exchange through exchange counter. Yesterday, I met a person who is currently living in Oman for last 30 years.
Mm-hmm.
Okay? And his dad has advised him that whatever happens to you, you will not spend the 8% or 10% of your salary to any. Okay, so for past 30 years, he has accumulated that 10% of amount of whatever salary he got, and the salary rose and came down. At before 30 years, the price of a real to Indian currency rate was approximately $90. Oh, sorry, 90 rupees.
Right.
Okay, and now it's 8 rupees, 1 real.
Okay.
So yesterday in front of spent around 30,000 Omani Riyal back to India, which is approximately some around 60-70 lakh of rupees.
Right.
So the point of CAGR that you're trying to explain, if we consider this person in terms of CAGR, it is around 80%, right? Or else if he might have sent the money in 15 years, the CAGR would have been reduced. And if he had accumulated the money from 15 years till now, the CAGR would be different. Since he has been in the market, for him, the market is the saving of his money, which is currency. The longer that we stay in the market, the longer that we put our money, the higher CAGR value, whatever historical time may be there.
Right. Thanks, Kaushal. Thanks for the input. I'll take that while explaining this. I'll take this example and explain him. Yeah. So so I'll tell you guys what exactly he was trying to say. It's an important thing to understand. Actually, it's cross currency things which has happened. I'll take that consideration between India and USD again. Real, not many people will be able to correlate that why it happened. But again, economy will come here. Okay, so I was explaining it to Mr.
Puneet.
पुनीत या पुनीत तो यहाँ पे कोई इशू नहीं है करेक्ट 2010 2011 the price was 210 in 4 years the CAGR was 52%. Any issue?
Right.
No issues, right?
नहीं.
Okay, now I'll now see the difference of 6 years 2011 to 2017. Again I will calculate the CAGR, right?
Yes.
Okay, so I'll calculate the CAGR and I'll see 2010 6 years and I'll put here a number like 25 and see it is coming to 801. I'll put now 22. So you people can have your own way of calculating it. I generally find it easier. थोड़ा speculate करके हो जाता है. So it has came around 18% CAGR now.
Yeah.
So here it is go. So 566 or something. So 17% CAGR we can take. So at this level, the CAGR is 17%. Now what is disturbing you? Tell me.
Sir, like suppose between 2015 and 2017,
right,
Sun Pharmaceutical Industries has hired, it has like bought 10 companies.
But why you
it has bought 10 more companies. That is the reason.
No, so that is the reason share price has gone down, right?
Yes.
So what should I do here?
How yes.
No,
so
see,
I mean to say like company has grown. I'm saying company has grown.
How can company grow?
If you see the past, see you.
No. Come on. Now see, there is two way of learning. Okay, one is you have to put a lot of logic and try to understand things. And there is one way where you have to first understand कि सामने से information क्या आ रहा है. अभी सामने से जो information मैं दे रहा हूँ उसको discipline के साथ एक बार अपने दिमाग में बिठाओ आप, ठीक है? And that information is this: the price was 2000 in 2011 it was 210. In 2015, it went to 1120 and it gave a CAGR of 52%. For someone who invested in 2011 and exited in 2015, he would have made a return of 52%. Now, this is not a logic. This is a statement that this happened. मिला उस बंदे को इतना return. And now there is another guy who stayed back in the market considering it a very good bet, and one day it will go to 2000, 3000, or will keep on giving the similar return. But then what he saw that the prices has come down and now his CAGR is 17%. Now this is again a statement, right? There is no logic here. It is just a statement, Puneet. CAGR का बस वो definition समझा रहा हूँ मैं कि compounded annual growth rate का फंडा है. So it's like an interest rate. It's a compound interest rate, right? So it has not grown by 52% now. Now it has grown by 17% only. Whether the company has grown or company has opened more units or whatever company has done, it has not reflected in the share price for sure. Share price has come down. Okay. So now CAGR is 17%. So there are two different topics you are mixing together. One is what is CAGR. So CAGR is simple. It's a compounded annual growth rate, right? And it is a statement.
Okay.
Here we don't need a debate. The CAGR was 52% in 2015 and 2017 for the same guy CAGR has reduced to 17%. No logic. It's a statement. The definition of CAGR, something like my age is 33, your age I don't know. I do not have to defend why my age is 33. It's 33, that's it. Similarly, it's 52 here and it's 17% here. That's it. Now the second part is subjective, where you are saying that company has done this or that, which I know, or maybe few things I don't know, but we can discuss about that offline, that why the prices has came down. This is what we are gonna do, that what happens in future, and this is one thing we should have in mind. Okay, so hope it is okay with you, Puneet, and we should proceed with the rest of the presentation.
Thank you so much.
Yeah, thanks. But we will connect offline if you have any doubt. But I think people should not have any doubt here on this CAGR part. But if still someone is having, you can ask me. I think at this point it's one of the case. Okay, so we'll move here. Okay, so very good that Puneet raised or gave us one example where one pharma company, very good pharma company, has came down and became almost half, and it is not with one company. It has happened with complete full sector. In a sector as whole, the pharma sector. Now, when we started this class, we started with the economy, industry, and then we said we will pick up one industry and we'll see something. Now, I want to introduce you someone. Let's go to this example. So let's meet Chetan. So anybody know about this guy? Anyone heard about him? So someone can tell me at least no. TK, have you heard about him? Okay. So he was one mathematics professor in New York University. Similarly, what Narayan Murthy was one day. So I am following this guy from 2010. Know few things about him. We'll go and see what exactly is this guy. Now let's move. Why I'm explaining you about one guy is businesses get built by people, right? So Chetan is one guy. His full name is Chetan Dubey. He's doing some wonderful things. So, and it is his girlfriend, Amelia. Okay. Let's read about what exactly his websites tell about Amelia. The most human AI. Amelia is most comprehensive AI platform on the market. She can increase the effectiveness of your operation by getting work completed more efficiently than ever before. But it don't look like a lady. It look like more like a machine or a replica of a lady. Okay, or a statue, I can say, wax. Amelia, your IT service desk agent. Amelia is pre-trained in a wide range of IT services desk tasks. Put her to work within your team today in order to absorb rising demand for support while improving your user experience. Let's see what Amelia can do. Let's watch this video.
We are indeed approaching a seminal moment. A tectonic shift is imminent. The basic platform for how services are delivered is shifting, not replacing labor with cheaper labor, but replacing labor with cognitive systems.
This phase that we're going through goes by all kinds of different names. I prefer this idea of the second machine age. The label cognitive computing is a really good label for it too. Call it what you will, it is a real phenomenon. And over again, I'm amazed at how quickly events are overtaking our expectations, our frameworks, our old ways of looking at the world.
That first true cognitive engine can service claims processing, can be the financial advisor of one of the largest investment houses here today.
I'd characterize it as the ability to sense what's happening, whether it be emotion, data, fact, whatever it might be, to understand and learn, and then to act on it.
I know it seems simple, but that is the key. To be able to answer a question as a human would understand it through learning in natural language.
It's always been about optimizing solutions around technology and then figuring out how to train the humans. And I think what we're seeing with cognitive technology is flipping the lens on that.
As you speak with Amelia, she trends where your emotions are, where they're going. And then she can use this information for decision making.
We don't need to optimize the system around the technology anymore. We need to optimize the solution around the human. And that's what the cognitive technology is really allowing us to do. And that's the real power of Amelia.
The one thing I can say with really strong confidence is we ain't seen nothing yet. As Amelia improves, as her siblings and her family tree expands, the advances that are going to come are going to make what we've seen so far look like the warm-up act.
Amelia. IPsoft's cognitive agent can take on a wide variety of service desk roles and transform customer experience. So let's catch up with her to find out more about what she's been up to lately. Hey, Amelia.
Hi there.
Can you break down some of the exciting things IPsoft has done recently?
I've started work with leading brands all over the world, including 4 of the world's top 5 investment banks, 6 of the largest insurers in the US, 3 of the top 10 global telcos, 1 of the top 5 gaming companies, and 1 of the world's leading hotel chains. With so many projects underway and more in the pipeline, IPsoft has doubled the team in New York and grown to 10 floors to continue developing and delivering cognitive projects. I'm excited to have so many new colleagues, and I'm particularly looking forward to welcoming visitors to our Cognitive Innovation Center, where they can learn more about the many ways in which I am working with clients across the world to provide their customers with the best service possible.
What would you say you enjoy most about your job?
I really enjoy making my colleagues more productive.
Thank you, Amelia, for the update.
Have a wonderful day.
All right, so you people seen this video, and let me share some facts about the IT industry. We have one participant from IT industry also. His name is Anuj. Anuj, you are with me? Anuj Dugal. Hi, Anuj. You are with me?
Yeah,
So can you introduce
yes, I'm
about
there.
yourself? Hi, how are you? How is it going? Any feedback?
Yeah, yeah. So my name is Anuj. For the participants, I'm an IT professional, and I have my own startup, which is a loyalty and marketing program company for on the cloud for small merchants. But before that, I have a lot of varied IT SAP experience and now analytics experience. So good to be in this class, and I am also a keen investor.
Right. Anuj, can you tell me something about your experience, past experience? About you worked in Infosys, right? Service company, IT service company. So can
I
you
worked in Novartis, and before that, Novartis, SAP India, and Deloitte. Yeah.
you worked in Infosys also? No.
No, not in Infosys.
All right. I remember you were working with Infosys. Sorry.
No worries.
Okay, so I'll explain then. So I'll tell you people about the IT industry and 4 5 major giants. Okay, this is my own study. So within this industry, what happens that the major source of revenue is obviously the billing on the projects, and people contribute to those billings. So people like you, me, who work in the IT company, and that company build the client on certain, and most of the clients are Americans or Europeans. So that the factor of earning in dollars work in favor for these companies. Okay, now what kind of work used to be done in these companies or getting done in these companies now? So we have seen the reasons why this industry has grown and contributed more into our economy. Let's try to understand what they do. So they develop softwares, right? And in softwares they have 3 4 departments. So some people develop softwares, the people who write codes. Okay, some people go and within the software industry go and test the softwares. So there are many testing mechanism: black box testing, white box testing, manual testing, automated testing, so many. So some people who are from IT industry can connect it. So there is a big team who do testing also. Okay, then there is a team who do production support, all kind of support activities. So when user is using that software, he may come across certain issues, and that issue needs to be reported to someone who can do immediate fixes and later pass it on to the developer to do the permanent fixes. So this is called the production support team. Okay, so 3 department: development, testing, production support. And these biggies have another department, and that is called the approx jobless department. They keep a hell lot of people on bench. So the bench staff rate is almost 24 25%, and all these companies fight within themselves just to win projects, and they show their muscle strength by showing what kind of bench staff they are owning right now. I'm talking about all big four giants in our country, about top big four giants, and even the smaller companies do that. Okay, so your major source of revenue is coming from the human capital. Out of that human capital, 25% is doing nothing, and when they are doing nothing, they are not going to be productive sitting in bench, or they will not become wiser anymore. I mean, this is my again perception which I'm sharing with you. Now you people have to do it with your own industry to understand it, whether the kind of growth IT industry has given, it will continue to give or not. So my view has changed off late. I feel that for some time the stock prices will go up because of the technical bounce back, but overall this industry is not gonna give the similar phenomenal. This is my own stand. So I'll look for those companies now who are more like IPsoft. So, but coming again to the industry, so you have 25% strength, which is sitting on bench doing nothing and not becoming wiser day by day. You have people like 25% of your staff, or 30%, maybe this number could be higher in some companies and go to 40% also, who are doing nothing but production support sitting in India for US companies. Okay, this is the critical part. And then you have people who are doing testing that can be automated as well. Now, what you saw about Amelia, I was aware about this in 2010 when I was working with the. So now I must bring why I got this information. So I was working with Morgan Stanley that time, and one company was billing us a very high rate, and we were looking for other vendors who can give the production support to our investment banking platforms. So that time two companies came. I don't want to name the existing company or the new company, but I want to name IPsoft. So that time IPsoft came with a proposal where they said that they can automate the whole production support system. Means instead of a man, there will be a humanoid who will listen to the users and give a very immediate solution. And this is a cognitive based AI thing which will work in the favor of the company. But it will be a long project and initial implementation will be costly. So we opted for the other vendor who was giving one third of the price of the existing vendor. And we became their one of the biggest client worldwide in terms of billing. It is TCS. Okay. So TCS provide a very good rate. Now, from that time onwards, I'm following this company, and what I see that this is the future. Now, again, this is a technology company, but gonna do wonders. And this is my own perception that these companies who are involved in giving production support or testing, they will eat the they will lose the pie to these kind of new companies like IPsoft, founded by Chetan Dubey in US, who was a mathematics professor and doing extremely well. He has opened a center in Bangalore now also. I know some people who are working there. So idea is, when you understand the movement of the industry, or when you know the industry from the deep inside, you can make much better comment or decision than what you see on TV from the other people, right? And that makes you cautious. So to answer this question, whether IT industry, so if we see the past, and the past show me that most of the IT companies has given me a 30% or 35% of CSER, does it mean that other it's same in the future? Then I would say no. I see these are the futures. I mean, and these futures will eat the pie of these existing companies in India, where they are providing most of the activities which can be automated. And unfortunately, as for my information, none of these companies have hired that kind of talent who will work on the AI part. Most of these companies are either based in US or in Israel. A lot of startups in Israel who is doing a lot of activity on the AI side, right? So on technology side, they are the future, and it keep on happening. Every 10, 15 years, 20 years, industry players get changed. They become the market leader. So when you decide to invest into some companies, you have to see that up to what time you have to be invested in that. So a very long term doesn't mean that 50 years. A very long term could be even 5 years, where you can rip off the maximum profit, right? So buying and selling both are very important. This is what I'm trying to explain in this this example. So in the recent activities, what happened in Infosys, again, this is a personal commentary of mine. I don't know whether I'm thinking right or wrong, but the guy who exited, I mean, SAP guy, I just forgot his name. uh, the last CEO of Infosys, he came from SAP.
Vishal Sikka.
Yeah, Vishal Sikka. So Vishal Sikka was involved in acquiring similar kind of company where he paid little more price because those companies were not ready to sell themselves. So I read it somewhere. I don't remember the case exactly. And this was the first time when the management or the board highlighted this question about the acquisition of that company from the Infosys. But what I saw that Mr. Sikka was a visionary, and he was taking the company into the right direction. And not only me, even the market has, shown this thing to the investors. So before Sikka resignation, Infosys price was 1120 rupees. Sorry, 1020 rupees. And the very next day, when the news of Mr. Sikka resignation came, stock price corrected by 12%. It was a well planned strategy of the company to announce the buyback of the shares at something like 1115 rupees, 50 rupees, 15% more from the market price. So buyback is one event where company offers investors to sell their shares to company itself at a better premium rates. So company buy back shares when they have surplus cash and when they think that they should own the voting power more and more, right? So this is what you know uh, happened, that even after the announcement of buyback, share prices kept on crashing and it has came down to 900. A technical bounce back came up, but again it has came to 900. And what I feel that it may come again a technical pull up of again 1000, or probably 1100 or even 1200 rupees. It may go up, right? Because business is at least giving some return and profit. They have project for next 3 4 5 years, but is it going to give the similar phenomenal return of 30%? The my answer is no. So something else will be there. What, I mean, we have to collectively see and hear more management commentary from the seniors or the specific industry, and try to understand what exactly they are trying to do in future. You have to have the futuristic approach, to become successful even in this market, right? So I think the questions which I was trying to explain, or why I shown you this people video, because I was trying to dissect into the industry part and company part also, right? So in my view, the industry standard of technology company has gone much high, expectation has much gone high, and these IT services companies has, though supposedly called tech companies, has failed in technology itself. They couldn't, you don't see any news coming from these companies about the AI, where every other guy is talking about AI thing right now in the market. And the talk things happens. If something good is about to happen, a lot of people talk about it, right? But that talk is not happening from the IT companies of India, right? So this is why I shown you people about Chetan Dubey and this thing. So this is just an example. There will be many more things like Tesla and all, who gonna change the world, or have a historical. So people make companies, Chetan will make company probably the way Murthy has made a company, Murthy ji has made a company. Okay, similarly, Tesla guy will make another big company, which is just a $50 billion company right now. Facebook is $700 billion company. I think in future, Facebook is important, yes. I'm not saying it is not important, but when I see the parity that a company like Tesla, which is making such a beautiful car, such a utility vehicle, and trying to harness the solar energy, is just valued at $50 billion, while Facebook is $700 billion. I see that there is a lot of a scope in Tesla also, right? So we all form views, and we form our views based on our own learning from newspaper, TV, talking to seniors. Lot many things are there, right? So that's why I take up this example of Chetan Dubey, try to explain you about one industry. You can do the similar analysis and discussion with your own group, or within yourself, or we can do together also. Since this is my full-time job, I would be more than thankful if some of you people will come back to me saying, Kundan, I know about this industry and we want to do some research around this industry to find good companies. It will help my client also, right? So probably that's why it is said that teaching is the best learning. Okay, so what we are trying to do in this class, we were trying to learn to become a fundamental researcher and understand the business and economics and the industry. So can you be become, or I become, a fundamental researcher? Of course you can be. It is a common misconception that only chartered accountants and professionals from a commerce background can be good fundamental analyst. This is not true at all. A fundamental analyst just add 2 plus 2 to ensure it sum up to 4. So no gap they found there when you are saying that the profit has come and it is giving this much of return. So that's how the share prices will go up. So to become a fundamental analyst, you will need some basic skill. So those basic skills are obviously understanding the financial statement. So from where to pick up this 2 and 2, you will find those numbers in financial statements. What are those financial statements? I will teach two. One is balance sheet, another is profit and loss statement. We'll do it tomorrow. Okay. Then understand business with respect to the industry in which it operates. So the something which I have done today, you have to have the industry experience, you have to have the industry knowledge, you have to listen to the management commentary to understand the fundamental of these companies. And then basic arithmetic operations such as addition, subtraction, division, and multiplication, nothing more than that. So we'll try to do this. So two things I wanted to do is, understand Nifty and calculate it in the valuation part. But if I do it now, it will be not a justice with these two topics. So probably this class will not go for 5 days, but 6 days. And but we'll do it in detail, or I'll see how I can adjust these topics in next three classes. But here I would like to sum up the class today. So anyone has any comment, any question? It became more like a discussion class today. Hope you people enjoyed it.
Yeah, hello, Kundan.
Yeah, hi Raju.
Hello, hello. Good evening. I just wanted to know. Actually, I missed the first half of the class. Can I watch this afterwards?
Yeah,
Is
so
this recorded or?
yeah, I'm today I'm recording. Yesterday session I couldn't record. I'm recording it today. I'll upload it on YouTube and I'll send you the link.
Okay, thank you so much.
No problem, Raju. May I know about you, or like, if you
Yeah,
can
I am
introduce
actually.
yourself?
Yeah, I am a commerce graduate. I just graduated this year.
Right.
So, and I'm also preparing for CAT 17.
Okay. All the best. Thanks, Raju.
Thank you so much.
Yeah. Where are you from?
I'm from Delhi.
Delhi itself. Okay. Okay. Hope you enjoyed the
Yeah.
class.
Sure. Yeah, of course. It's for fantastic. Thank you so much for the
Thanks.
class.
Thanks, Raju. Thanks.
Sir,
Yes.
hello.
Yeah.
So,
Krishna
so
Makaria. Tell me.
yeah, yes, sir. So where can we access the PPTs which you're showing us?
So
Is
I'll
there any
share.
possibility that?
Yeah, I'll share the PPT. It is on Google Slide, so it is having a sharing
Okay,
functionality. I'll pick up your people mail today, and I'll share this PPT with you.
okay, sir. Okay.
Okay? Yeah.
Thank you. Yeah, thank you.
Right. But I have one suggestion. Try to assimilate everything in the class itself. कोई पढ़ता वढ़ता नहीं है नेट पे बहुत सारा मटेरियल पड़ा हुआ है बहुत वीडियो है सो इंटरैक्टिव क्लास करने का मतलब ही यही है कि you learn it through the talk and all, no need to go and refer back, always build over things. But anyway, I'll share all these materials. uh Rajiv sir, any question?
Yeah. Rajiv, me?
No, Rajiv Malhotra.
Oh, okay, sorry.
So Rajiv sir, I was explaining you this right about Amelia and IPsoft in past. I thought it will be a good case study to include into this class also. Anuj.
It was very entertaining, matlab, very informative, the Amelia part of it.
Right,
You
right.
had been kind of hiding the name of the company, but still, I think IT companies have at least a couple of years for
Yes,
them to milk
no
this
doubt.
thing, and even like you mentioned that there will be initially a lot of industries are going to be very uh, it's going to be difficult because the initial capital cost will be high.
Right,
But
exactly.
yes, with the initial pain, then the long-term operating costs will come down.
Right. So my idea was whether it will be a winning industry the way it was for 15 years with the same CAGR. There I have a doubt. Okay, whether it will keep on continuing, keep on growing at 15% or not? Yes, I think the answer is yes. For another 5 years, they will give 15% CAGR for sure. Still a lot of heat left, and it is undervalued at this point. If we don't see that future is going to disrupt, they get disrupted by AI, it is undervalued according to me also. Both Infosys, HCL Technology, Wipro, Tech Mahindra. This we will see tomorrow. Obviously, when we'll do the balance sheet and profit and loss statement and the valuation part. So Rajender call sir. Hope you were in class. Any question or any comment? I mean, I'm asking the senior people because there are some junior people. They will get benefited by whatever you say. It will be more like a affirmative statement from your side that yeah, you also have something to say. Shad. Shad, Sweta. So people, you can unmute, and if someone has anything to say or ask, please do it.
Kundan, actually, I have bad connectivity here, so like
Right.
it's cracking in the middle.
Okay, no problem. I'll send you the recorded part. Yeah, Shweta.
Sure. I'll comment on the YouTube video.
Sure. It will come.
Sure.
Yeah, Shweta.
Yeah, Kundan, it was nice. Yeah, it was a nice session. I could relate to, like, it was a good thing that we could relate to GDP, to the sector, then to the industry. So, understanding the fundamental basic parts, it was good. But I'm much more interested in getting to know the how to know whether any industry is undervalued or overvalued, and like on what parameters and on what basic basis we decide that in which sector we should enter, and when to enter and when to exit. This is a very important part.
So let me reframe your question. So Kundan, I'm more interested in knowing how to make money, right?
That is what we are here for.
So here is the answer. Work hard in the company you are working, grow faster in the hierarchy. Okay, that's how you will make money. And from the investment side, you have to just protect the inflation. You're not gonna become very rich by investing into stock market, but you should know it, because you have to look it for the longer term. So have some patience. Be whatever I know, obviously I'll share tomorrow, day after tomorrow. We'll come to know about the valuation. You and me, you come from the pharma sector, you messaged me that day. So
Yeah.
collect some information about the pharma sector. It's in troublesome state. We have a lot of investment into pharma. We started doing 3-4 months back, and thinking that it has came already down, and it kept on going down. We would like to hear something from you about the pharma sector tomorrow, when we'll complete the valuation and other thing. We'll do it, but how to do the valuation, we will do it. But a good time to exit or entry is something very subjective. Nobody knows it. Nobody can time the market. This is what it has been done. But yes, in portfolio management and risk management class, at least I can tell you that how to design a good portfolio. What are the basic rules you should follow? What even the Warren Buffett follow. Okay, but when to exit, when to enter is something which is called timing the market or timing the stock price. Nobody has ever be able to done it. We will be also not be able to do it, right? But yeah, we'll learn the good practices of investing. We will learn how to do valuation. Maybe 100% accurate, maybe not, but something like that. But you will make money. You'll make money. Don't worry. We'll do it in that way. So have some patience.
Okay.
3-4 more days. Okay.
Thanks.
Yeah. Thanks, Shweta. So I had some really new people. I keep on sharing it on my Facebook and LinkedIn, and that's why people join. And I'm really happy, TK, you joined. I'm really very happy. It's having a batchmate in in a class like this is really encouraging.
I'm quite new to this. I have no idea about this. So I was like, okay, since you're taking a class, I might as well join and
Right.
try to make use of it.
Sure. Hope it was helpful.
Absolutely.
Okay. Cool. Thanks.
Thank you.
Yeah, we'll connect offline. Yeah.
Absolutely.
Anyone? Yeah. Thanks. Take care. So Puneet, all.
One more.
Yes.
Sorry to interrupt, but yesterday I asked a question about brokers, and you promised me to share the list or the link, but I didn't get it.
Still, the day is not over. I'll send you before 12.
Okay.
Okay.
Thank you.
Yeah. Thanks. I'll send it after the class. I missed it. It was a busy day. Raminder sir, it's all okay. Hope you were in class. Puneet, Lalit. All right. Okay. Then we'll conclude today now here itself. So thank you all. Thanks for joining. Have a good night ahead.
Good night.
Yeah. Good night. Take care.